Everybody, you manage $30 billion, and you were saying you've got to put your money somewhere. Right now, a lot of it is in short-term treasuries and German bonds. Is that to say that you are afraid of taking risk right now?
Absolutely. I mean, the main thing that's driving our decision about where to lend money or where to place our funds under management, $30 billion, we put the vast majority of it is dollars, so we keep it in two-year notes, and we have a chunk of euros, which we keep in German two-year paper. But we're not interested in taking any peripheral debt risk at all, and we're not interested in taking any bank credit risk right now.
But do you feel good about the U.S. or Germany, or they're just the best of the bunch here?
I think they're the best of the bunch. I feel pretty good about the United States. I don't have an issue because I think that the control, the complete control that the authorities have, particularly because of the Fed and their bond buying program, we don't have any issues about having money in two-year securities in the United States. In Europe, you've got to put your euros somewhere. It's a much more difficult place to make a decision. But two-year Germany to us feels like a reasonably safe bet right now, certainly compared to anything.
Michael, why is it that you are concerned about taking risk? If I divine what that means, it's you're looking for all of the potential opportunities out there in the world not to perform, whether it's according to your expectations or according to somebody else's expectations, which is to say that the safest place is just to be what effectively amounts to cash.
Well, this is where we keep the actual cash. We take risk in financial instruments such as futures and options and swaps. However, I think the most important thing to remember about crises is that you don't make your money going into the crisis. Because when you go into a crisis such as 2008, markets trade against positions, okay? And people have positions on, and people need to get risk off, okay? So all the things that people thought were a good idea start going into reverse. The big money that you make in trading, right, is more in the aftermath of a crisis. In 2009, we made 60% with no down months on our master fund, our $10 billion Capital International Fund.
Now, is this BlueCrest special sauce? It sounds like you're saying we're not investors, we're traders.
Oh, we are absolutely traders. To me, an investment is a short-term trade that's gone wrong.
Michael, we're going to take out about a minute and toss to Scarlett for just one second. Michael Platt now of BlueCrest Capital Management, a $30 billion hedge fund. Michael, so yes, you've got your money in treasuries, short-term bonds. You are willing to take some risk in certain places. But what kinds of securities appeal to you? Are you looking like some other people are looking at illiquid investments, for example? You hear a lot of hedge fund managers saying, man, my goodness, there's a lot of money, a lot of yield to be had in some of these illiquid products.
I wouldn't touch an illiquid product with a barge pole, to be quite honest.
Why?
We're going into an environment where banks need to delever. Illiquid assets are going to be coming out onto the street everywhere, right? You know, the price of liquidity, in my opinion, is going to go up. Right? I don't want to own any illiquid assets whatsoever. I mean, the strategy at BlueCrest is to be in super liquid products, super liquid futures, options, government securities, but things that basically can be turned around in a day.
But you're not tempted, just as you're saying banks are shedding assets. We're hearing from many investors saying this stuff is too cheap to ignore. It might be liquid, but I've got the cash, I'll sit on it. You don't feel that way?
No. It would have been the end of my business in 2008 if I'd done such a thing. Anybody who had illiquid positions within their hedge funds, there were runs on those hedge funds because people wanted to get the cash out and not be side-pocketed with the illiquids. I mean, in 2008, I paid out $9.5 billion to the street because I was the only hedge fund that was up a lot and completely liquid.